All right, we are officially live. Excited to do something a little bit different, but I figured I had to do this because in having a great conversation with my guest, our good friend Lawrence over here, just dropped a lot of truth bombs in a prior conversation, and so I'm excited to actually get you on here and get your thoughts. And because you mentioned a lot about hyperinflation, and so a lot of people don't really take that into consideration, the fact that we are entering into a new monetary paradigm. So I want to get your thoughts. So Lawrence Lepard, welcome to RTD Live Talk.
Well, good to be here, Mike. Thanks for including me.
My pleasure. And so I'm excited to get a chance to have you share some of your knowledge and expertise with the audience, as well as hopefully get a couple of thoughts or comments from those that might be tuning in, even though it's early morning. But as always, if you guys have any thoughts, questions, feel free to just throw them in the chat, or the phone lines are open, so you can give us a call as well if you would like to do so. And so we got James, we got Nathaniel checking in with us. So I appreciate you guys for joining us this morning. And so, Lawrence, let's dive right into it. I want to actually throw out the first question. And the first question is, what is the new monetary toolkit? What is the new monetary toolkit you think is underway? What's been hinted at? What do you see coming?
Yeah, it's a great question, and it's what I focus on most because I run a gold and silver stock fund, and I own a lot of gold and silver. So, the repo thing was a big deal. It happened in September. And what it indicated is that they can't ever really taper. If they do, interest rates are going to go up. So they did a complete 180, probably the fastest Fed reversal in history. And then since then, they've given us a lot of clues. And although they've said it's not QE, of course it is, as long as they say it's not QE because it's temporary overnight. Of course, if they do it every night, then it's really not temporary. And they've given us some clues. The most important one, the biggest one that some people probably haven't observed, but I think it's really important. In a speech recently, Chairman Powell said, we're considering, and they do this, they float trial balloons. They said, we're considering the possibility of fixing interest rates at a certain level and letting the size of the balance sheet fluctuate. It's a form of financial repression that was used after World War II, and we had a lot of debt from the war. And they literally just pegged, short rates, 30-day rates, 1-year rate, 2-year rate, 10-year rate at a certain level. And to the degree that people were selling those bonds and there were rates were going to go up because people were selling the bonds, the Fed would buy them and increase their balance sheet. And Powell mentioned that this is something they might consider trying. It's in their toolkit. And I think that's a forewarning of that's where they're going to go. The system as it's currently constructed cannot handle higher rates. Higher interest rates will croak the stock market, croak the economy, and be very problematic for what they're trying to achieve. And so they know that they need to create inflation, and they do that by creating a negative real rate. And they create a negative real rate by preventing the bond market from selling off, and they prevent the bond market from selling off by being the ultimate bidder in the bond market. And so if they fix the rates at a certain level, that's fine. The minute that somebody sells a bond and the rate would go up naturally when you sell a bond, rates go up, they step in to buy it. But they can only step in to buy it by creating a countervailing asset and liability on their balance sheet, so their balance sheet grows. And as I put in my most recent newsletter, which you've attached and we're going to show here in a minute, the balance sheet has already grown rapidly since the repo backup. And I think it's going to continue to grow. And intelligent people that I follow and work with believe it could be as big. It's in the 4 billion range or 4 trillion range right now. It could be as large as 10 trillion within a year or two. And I think what this tells you is that they're trapped and they've got no solution except to print money to keep rates low. And that as that money printing continues and inflation becomes more obvious, there will be more sellers of bonds, and then they'll have to buy more. And you can see where I'm heading here. It's kind of a doom loop. The more they print, the more there's inflation. The more there's inflation, the less people want to hold bonds. The less people want to hold bonds, the more they sell them. And then since they have to buy them, in order to buy them, then they have to print more. And you kind of keep increasing the numbers and study history and look at what happened in Germany from 21 to 23. That's exactly what happened. They were trying to hold rates down because they had too much debt. They couldn't meet the debt. And von Havenstein had a choice of either social unrest or printing the money to buy the bonds to keep the rates down. And I think we're faced with the same choice, and I think there's no doubt about what they'll do. I mean, the alternative would be to let the rates go up, have the stock market crash, have another depression, and they want to avoid that at all costs, even though what they're doing will end badly. It'll take some time to end badly, and so they're always playing for time, not necessarily the best outcome.
Yeah. So it sounds like a continuous loop of the same things reoccurring throughout history of debt reaches a point of it being unsustainable. Therefore, the issuer or the creator of that debt, which happens to be the whole concept of the central bank liabilities. I remember watching Jerome Powell FOMC meeting last 2 weeks or so, and him talking about Federal Reserve liabilities. And like he mentioned liabilities several times. I'm assuming he's referring to those debt instruments that are given to the government in the form of, the currency or whatnot. So with this 20-year bond being introduced or about to be rolled out, so it looks like the Federal Reserve will be the Treasury will be the issuer, and then the central bank will be the purchaser. At what point does the rest of the world realize that they're basically legally counterfeiting and propping up this monetary system with these fictitious pieces of paper and digits, to where they decide to say, hey, enough's enough. I no longer want to be a part of this charade.
Right. Well, that's the $64,000 question, right? How quickly does it unravel, and what's the time scale under which it does unravel? But I think it's going to be measured in years, not months, but years, but not decades, not 5 years. I think it's happening as we speak, in my opinion. And I think that actually the clue, or one of the better clues to watch, is the alternative form of sound money, which is gold. And so, I think the gold price will take out 1,700 sometime soon, next few months. Then I think the gold price will take out 1,900, and that'll be a big deal, because the last time it was over 1,900 or around 1,900 was late 2011 or mid 2011. Mm-hmm. And then, people will think, okay, it's 1,900, it's going to correct out of here. It's at the high end of the range, and they'll be wrong. And it'll go to 2,500, and then it'll go to 3,000. And people will start to wake up and realize, and all the while, there'll be more sellers of bonds, and then more buyers. The Fed will be forced to buy more, and their balance sheet will be forced to grow more. Mm-hmm. And the thing that I've described as a doom loop will become more and more apparent. And, as it becomes more and more apparent, people are going to run away from this. So, it's pretty obvious to me that that's where we're headed. But the timing is obviously, impossible to predict with certainty. But I know which side of it I would rather be on.
Yeah. Now you say gold has a chance of spiking, and so we've saw a lot of activity in the metals markets, and so of course I think is just this week, depending on what charts you use and what sources you get your information from the spot price. I saw a sudden dip in I think it was from Kitco, if I'm not mistaken. It dropped to 1601 for silver, and then gold took a little dip, but then literally a couple minutes later it went back up to the price of where it settled at. And so, do you see there being some type of disconnect pretty soon of the mechanisms is used to give us the spot price fails?
It's certainly possible. I mean, the people who run the system have a vested interest in not letting gold get away from them. And there's a lot of paper gold, and they play a role in creating that paper gold. And there's manipulation, without a doubt. I mean, it's even been shown and proven recently that, I think just yesterday, Bloomberg had a headline about how JP Morgan was being investigated criminally for manipulating the gold and silver market. So there's certainly that is going on, and that will continue to go on. But, at the end of the day, there's 6 billion people in the world, and, they know what gold is. They know what the value of gold is. And paper gold is one thing, and having physical gold in your possession is another, and they're very different. The paper gold could settle force majeure one day, and gold goes to 10,000. You think you own gold, but you really own paper. And the person who issued the paper says, "Sorry, I'm Lehman. I'm bankrupt. You don't get your gold."
Yeah.
So it's an important distinction that if you're going to hold gold or silver, you want to make sure you hold the real thing, because that discontinuous price move could occur. I don't really expect it to occur. I think they're going to hold things together, but they're going to slowly but surely lose their grip on the price control. And this happened before. In 1968, they had a gold pool in London, and gold was officially priced at $35, but it was trading higher than that in the London free market. Mm-hmm. And it began slipping and slipping and slipping, and ultimately the London gold pool had to give up. They couldn't hold it at $35, and then Nixon broke the link in '71. So, it's going to happen here too. It just hasn't happened yet, but it's going that way.
Yeah. Now at this current moment, I like how one thing I like that you reference history a lot. And so Weimar Republic, you mentioned a lot. You see a lot of similarities there. And you mentioned the situation with inflation, the price of gold back in the 70s. And so clearly, since the window was closed, we've lost a standard for our currency or standard for money. So now it's more so a debt-based standard. And we're witnessing that come to an end. Now, moving forward at this current moment, I just saw an article or a news little alert saying that Tesla dropped another 4%. So it looks like the melt up might be coming to an end. And so I'm assuming that, the funds that's used to prop it up might be having a little bit of a falter. And so did you ever pay much attention to that missing 21 trillion?
I'm familiar with the argument, and I don't doubt that it occurred, but it's not something I've dug into deeply.
Yeah.
But the Tesla thing is an interesting thing that you should mention. To me, Tesla went on a rocket ship ride, went parabolic really in the last week, and then is now come back off. It's actually, as you mentioned here, it's doing a little bounce. It's green again today, but in general, it's way off of where it was. And Tesla reminds me very much of all the dot-com companies in late 1999, early 2000, right before that bubble burst. A lot of companies then went parabolic. And of course, it didn't end well. Globe.com, Pets.com, Lucent, JDS Uniphase, there's a whole list of them. And so, to me, it's an indicator that we are in the final innings of this stock market bubble. Again, I just don't know how to gauge it to the day or the week, but we're a lot closer to the end than we are to the beginning. And, it's free money is a hell of a drug, right? I mean, it's fueled a lot of bubbly stocks, and Tesla's one of them.
Yeah. So, now I want to move into the next question, and it has a lot to do with the hyperinflationary event. So how can QE turn into a hyperinflationary event? Because at this current moment, the velocity of money is relatively low. There's still confidence in the Federal Reserve note. There just seems to be that the rest of the world's melting down. So people are getting out of their currencies because of their issues, and they're running into dollars as a safety hedge. So right. I have friends outside the country, South America particularly, that see the dollar as the best way of hedging against their own currency. So if the world's running to the dollar because of issues and the Federal Reserve is printing dollars, hyperinflationary event relatively soon, can they hold this thing off or what?
It's a great question. There's no doubt the dollar is the cleanest shirt. But what I would submit to you is that gold and Bitcoin are even cleaner. And so what needs to happen is more and more people need to become aware of the fact that the U.S. is really bankrupt. I mean, and that's an important point. That's an important underlying point here. What's driving the Fed behavior, and of course they hide it because they buy from the primary dealers, and or the primary dealers buy the debt, and then the Fed ultimately buys from the primary dealers. But they're printing money to cover the deficit. Let's not kid ourselves. And so that occurs because the deficit's large and growing, and because the other buyers have gone away. There was a time when other buyers bought, and you could hedge away the dollar risk or whatever and have a positive return. When negative interest rates are negative in Europe, a positive return looks like a good thing. But the point I'm trying to make is that we've got 200 billion or trillion of unfunded liabilities that are going to run through the income statement as baby boomers claim retirement and Medicare. And so that deficit's, and we've got a political structure that both sides are talking about spending more money that we don't have. So the deficit's only going to get larger. It's already $1 trillion on a 3.6 trillion of tax income. So it's almost 30% of tax income. And history shows that when you have a deficit, it's more than 20% of tax income, and you print the money to cover it, you're on your way to hyperinflation. So we're already over the limit. It's going to get worse. So, I've kind of forgotten your question. I mean, how does it become hyperinflation? I guess what happens is Gresham's law kicks in. So as more and more people become aware that the Fed is trapped, the government has only one policy. That one policy is to print money to cover the deficit that they're running, and that obviously printing money dilutes the value of any individual unit, any individual dollar unit. People will say to themselves, "Hey, I don't want to hold my wealth in dollars or in bonds. I'm going to get crushed on a real basis." I mean, bonds government bonds may give you your principal back, but if gas is $10 and steak is $100 a pound, you're not going to be able to buy the same things. And so what they need to see is a better alternative. And people in South America, as an example, Argentinians have always saved in dollars or pounds or something else because they know that Argentinian government's corrupt, they're going to spend too much money, and they're going to have hyperinflation. They've had it over and over again. The U.S. hasn't had hyperinflation. We've had some soft defaults like 71 and 33, but we haven't really had a hyperinflation since the Civil War or the Continental in 89. And so, what needs to happen is you need to have a substitute that looks better. And gold is the natural substitute.
And silver.
Gold and silver are the two natural substitutes. And so they need to look better, and people need to be aware of what's going on, and more people need to run in that direction. And human beings will do, we're herd animals, and we do what we think is in our own best self-interest. And, when gold takes out 1900 and inflation is very clearly present, we have inflation. They say we don't, but of course we do. It's going to get worse. People will start saying, hey, you know what? I need to save in something that's sound, and gold is sound. Yeah. Now, the powers that be will try and convince you it's not, and they're going to throw us off the scent, and they might threaten to tax gold. It's going to be quite a battle here. Yeah. And of course, some people are going to say, well, yeah, okay, fine, but it doesn't pay any interest, doesn't pay any dividends, doesn't do anything. And so they're going to save in stocks. And honestly, stocks will be a much better investment than bonds, because at least they represent a claim on a productive, enterprise, which could reprice, in the new system. In Weimar Germany, people who own Siemens shares or Mercedes-Benz shares, while they lost money compared to the people who hold gold or dollars or pounds, they ultimately got back to where they were if they held on to those shares, because post the hyperinflation, they went back to a gold standard, and these shares gained value back because they were real enterprises. People who held bonds, or who held Reichsmarks, or who held anything that was currency denominated, were totally wiped out. There were stories of how, a lifetime's worth of savings could buy you, a loaf of bread.
No. I've heard a lot of stories and talked to people, like especially in Zimbabwe. Like there's a couple people I connected with in Zimbabwe that gave that same testimony of how everything was good until it wasn't. And so I want to ask you a question. One person just asked a question about with the current situation, which equity would you consider being something worthy of looking into? What's personal opinion, of course. What do you see doing well?
Yeah. So if you look at equities in general, we've had this incredible run in technology and what I would call kind of growth. The NASDAQ 100 kind of names, and FANG, Facebook, Apple, Google, etc. And they're at record valuations compared to their earnings power and what the businesses look like. And then in turn, the area that's just record cheap is anything that has to do with the commodities area. Anyone who's a business that's tied to the commodities, because if you Google commodities versus S&P 500 chart, what you'll see is that the S&P 500 is selling at record highs relative to commodities. So I think the cheapest equities right now are equities that deal in commodities or that are tied to commodities. But all equities to some extent will be better than bonds, because again, they represent a claim on a business. And so, I personally think within the equity sector, the clear and obvious choice and this is obviously, I'm self-interested and biased on this, but because I run a gold and stock mining company fund, I think gold and stock mining companies will outperform pretty much everything, including gold and silver. They typically are, a multiplier of the underlying metal in terms of what they return, between 2 and 4 times, kind of depends on the cycle. So, I would basically, you can do it pretty easily. You can just buy the GDX or the GDXJ, and you'll participate in what I think is going to be a very large bull market for gold and silver mining stocks.
Yeah, interesting. Now, I'm curious to get your thoughts on the FANG stocks, Facebook, all the entertainment stocks. And so I heard Netflix just missed their subscriber base, didn't grow a little bit, and Snapchat and all those apps and all those internet companies that solely entertain people, add no real value, in my personal opinion, to humanity other than just dumbing us down and keeping us distracted. Are you confident in those things moving forward? And so those are the leading.
We all need entertainment. They do add some value. I've seen some good movies on Netflix, but again, they're not cheap, right? Yeah. The fundamental rule of stock investing is, price is what you pay and value is what you get, and value is what determines your long-term outcome. And the value, those areas have obviously done extremely well, to the point where I think they're very extended relative to the underlying value. And I think that extension will revert to some mean.
Mm-hmm.
You can't, in general, history shows that in general, when you're paying between 30 and 100 times earnings, that's not going to end well for you as an investor. I mean, you've paid for all the potential they have and then some. And with any kind of a hiccup or a problem, you're gonna lose money, or you're gonna underperform. I mean, in turn, in the gold mining area, as an example, I have companies I've invested in that are selling at 3 times their cash flow. So that would imply that their cash flow is providing a 33% annual yield, to an equity investor. And in a zero interest rate environment, there's really nowhere that you can get a 33% annual yield. So it's to me, those businesses are, they'll be around. I just don't know if they're good investments. I think at today's prices, they're probably not.
Mm-hmm. Interesting. And so I got a thought here. It says Zero Hedge report. This is from Chris. It says Zero Hedge reported 35 trillion missing in Pentagon just last year. And so that's commented. I think they're going back and forth with each other. And so the repo market is underway. Clearly, there's a crisis happening behind the scenes. And someone mentioned that the New York was oversubscribed today as well. So where's all those funds going to? Any chance of Deutsche Bank getting some of those funds to prop up their issues? And what are your thoughts on the repo market? Where is this going to get worse?
Yeah, it's going to get much worse. I mean, they're going to have to continue to plug all the holes, and we don't know where it's going because the Fed isn't transparent.
Mm-hmm.
The 35 trillion missing from the Pentagon wouldn't surprise me. I mean, I don't think we really know a lot of what's happening behind the scenes, but we did see in 2008 that they, in order to stem that crisis, I think they had to send 16 trillion out into the economy on a brief basis to plug all the holes, and they did it to European institutions and U.S. institutions. So nothing would surprise me in terms of how far these people will go to keep their fraudulent system running. However, all we have to do is take the other side of that, recognizing that when we get them, I mean, the best thing we can all do to make it happen faster and to bring their crooked system down is take delivery of silver and gold coins. Because there's a huge paper market in these two assets, and they've managed to suppress the price by issuing a lot of paper silver and a lot of paper gold, and it's not the real thing. And as more and more people desire gold and desire silver and want the real thing, they're going to have a problem because the paper's not going to suffice, and the price of the real thing is going to, it's going to de-link from the paper gold, and the price of the real thing is going to go higher and higher. And that's really all it takes. I mean, all it takes is for people to come to the conclusion that their government is fundamentally bankrupt, that debt cannot be serviced. And, then it's going to become what I call a doom loop where, they have to print money. The printing money leads to more inflation. More inflation leads to people selling bonds. They have to spend, they have to print more money to buy those bonds to keep interest rates low. And by the way, Jerome Powell has signaled that he will do this if he needs to. And it gets worse and worse. And so anyone who's in bonds, eventually they start to realize, holy shit, I hold this bond that's worth $1,000, but $1,000 is going to buy me a pack of gum. And so I got to get the hell out of here. I'm going to sell this thing. Well, who's going to buy it? Nobody who's sane is going to buy it. So the government's going to buy it. How are they going to buy it? Well, they're going to issue a bond and they're going to print new money to buy it with. Well, hang on a second. Doesn't printing the money make inflation go up? Yes, it does. And that's how it ends.
Yeah.
Google the Weimar Germany Reichmark compared to gold. I mean, it kind of slopes up gradually, and the slope keeps increasing, and then eventually just goes vertical. November 23 was all over. I mean, nobody, you could have a wheelbarrow full of money, didn't matter. Nobody would take it. The currency was completely worthless. And that happened in Zimbabwe, that happened in Venezuela. And what's unimaginable about it, I think the reason it hasn't happened already is that we're the world's reserve currency and we have all the weapons and we've got 45 years of history of being well run. Yeah. But, if you look at the political environment today, you look at the balance sheet today, you look at the income statement today, I don't think there's anyone who could argue that the U.S. is well run right now on a fiscal or monetary basis. Yeah. And it's not only not well run, it's getting worse. And so, the question really is just a matter of, what rats jump off the ship earliest. And I'm a rat. I've jumped off the ship. I mean, the ship is going down. There's no doubt the ship is going down. I don't know when, it's going down. And so, more and more people are going to join me because they're going out of self-preservation. And that's what Gresham's law is. Gresham's law says you buy the sound money and you spend the unsound money.
Yeah. All right. Now, as we draw towards the end of our discussion, last thoughts is your prediction, or not predictions, but just analysis on what do you expect gold and silver prices to look like in 2020, given the fact that pretty much gold is all-time high for the most part, and a lot of other currencies around the world, signaling issues in those economies there. Where do you see it happening? What do you see it ending up here, end of the year, next year? Given all the QE and
I don't have any crystal ball, and I can't say how quickly it'll happen. But my gut tells me that we're going to take out 1700 very soon, and we've got another leg up in what we're doing right now, around 15, wherever we are, 15, 17. Maybe we correct a little off the 1700, and then sometime in the spring, late spring, and then I think after that we're going to go make a run on 1900, and I don't know if we'll go there and stop or if we'll go there and blow right through it. But we're definitely going to take out 1900 this year, in my opinion. And then I think next year, and people are going to say, okay, well, that's it. We'll get it under control. It's coming down now. And, I think that after that, it's going to go towards 2500. And at that point, more and more people are going to wake up and, holy shit, there's something really going on here, because this is an asset that's not correcting. It should, it ran up, it should correct. Right? And so it won't. And it watch as more and more people. I mean, it's like being in a theater where there's a fire, and a few people smell smoke and they quietly leave, and then more people smell smoke and they leave, and a few more and they leave, and then eventually somebody just says, "Hey, holy shit, there's smoke, there's a fire, we got to get the hell out of here." That's that's how you get to Weimar. And so I don't know how it, I don't know exactly the timing. I mean, there are smart guys, really smart guys. Alistair MacLeod, who's an analyst out of London, who's done a lot of work on this. He actually thinks it's going to happen this year. He thinks that we will have hyperinflation by the end of 2020. I don't believe that. I mean, it's possible, but I think that's unlikely. But I do think it'll happen within 3 or 4 years. I think there's no way 5 years from now this is all over. Because
5 years.
Yeah. Almost. So
yeah, so that plays into the whole concept of rethinking the dollar. And so I came to that realization several years ago on my end of realizing that based upon what's happening outside, it's inevitable that it happens here. Just can't tell when that will be, but yet I believe this decade we will witness something in that magnitude of the Federal Reserve note being rejected and there being some type of digital currency issue to try to keep confidence or whatever's coming. I think it's already in their mind. They know what they want to roll out. Now it's a matter of, can they do it in a timely manner, or will things crumble or the sink ship before they get a chance to issue something new?
I see a comment here. Somebody says executive order will cap the price of gold. We'll have to sell abroad. You got to remember, and I saw another comment said they're going to confiscate all the mines. What you have to remember is that anything they do along these lines only weakens the confidence in them and accelerates the problem. So, yes, there are steps they can take to try and mess us up. I mean, I anticipate they might try and put a tax on some of these things, whatever. But again, they're desperate moves by desperate people, and Americans are smart and crafty, and I mean, if they try and outlaw gold, or they try and come and grab all the gold, I mean, half this country is heavily armed. I mean, I don't think they're going to be able to pull it off. I mean, I think the bottom line is they're screwed. They don't know it yet, or maybe they do know it, but they're screwed. And the issue is just on what time scale. But it's any way you look at it, they're screwed.
Yeah.
So it's going to happen, and it's what's described as a fourth turning. Very good book by Howe and Strauss, which I highly recommend people read, because I mean, the system is very broken. We all know that. And what we're seeing here is just the unwind of this existing system. Yeah. They can tax anything, but that doesn't mean I'm going to pay it. You're going to have a lot of civil disobedience. I mean, remember when, all this stuff starts to come down, people are going to make up their own rules. You know, I mean, hey, the other side's been doing it. I mean, they banned short selling in September of 2008. I mean, it cost me, millions of dollars because I was short all the financials.
Yeah.
So, they'll try a lot of tough stuff, but it doesn't necessarily mean we'll have to go along with it.
Right.
Fourth attorneys have always had a huge word. Yes and no. Some have, some haven't. But it's interesting. I think that I'm optimistic that we can have a financial collapse without a war. That the right people will be hurt by it because they won't be smart enough to buy gold. Unfortunately, a lot of innocents will be hurt by it too. But the system can reset, and then we'll have a much better, rebirth for my kids and my grandkids.
Yeah.
So
interesting. So with that being the case, we're about to dial back. It's been 30 minutes. As I mentioned, just didn't want to hold you up for the rest of the day. And then also I see a lot of glitches on my end. So it looks like computer getting hot. And so I appreciate you, Lawrence, joining me on such short notice here on RTD. And so I appreciate everybody just taking time to watch us. If you've enjoyed this, don't be afraid to donate a thumbs up. Just click the button beneath this. Take this URL and share it on your social media with your family and friends so they can see that there's people out here that can lay a pretty good case as to what's going on and what's coming, so that hopefully they're not caught by surprise and become victims of just not being tuned in to what's really going on behind the scenes. Because my philosophy is, if you're listening to people who are reading off teleprompters, then you're more than likely already late to the party. So, but I try to bring something fresh every day for you guys. So other than that, we're about to dial back. Be blessed, be safe, and I'll see you guys later. Lawrence, once again, for those that may not know you, point them back to where they can find out more about you.
Yeah, so I'm on Twitter as Lawrence Lepard, at Lawrence Lepard, and then I do an email mailing list. Anyone who wants to subscribe to it's free. Is Lepard at EMA2, Edward Mark Alpha, the number 2.com. So just send me an email, I'll put you on the list. I do a quarterly update, and sometimes interim updates as well. So, and the best thing everybody can do is buy gold and silver coins and take delivery. I don't think you'll have any regret if you do that at this time. I think you'll be, and in fact, I think you and your family will maybe perhaps enjoy multi-generational wealth if you are able to put away some serious money, because the reset is going to be very hard for people who have not purchased silver and gold.
Yeah. Okay. Well, everybody, be blessed, be safe, and other than that, I'll see you guys later. Coming up with the news update. All right, Lawrence, thanks for joining us.
Take care.
All right.